The markets have digested Jerome Powell's words and in the cold light of day realized maybe things aren't as bullish as they thought they were. We're going to be discussing that, the latest economic data, what's going on in Japan, peek into the charts. So stay with us here on Money Never Sleeps. Welcome back to Money Never Sleeps. Before we get going today, do us a favor, hit that like button down below, subscribe to our channel. Nothing that Kevin or I say is financial advice, not financial advisors. A couple of guys who like watching the markets, commenting on it, but please do your own research before making any buys or sells. Kev, we see a lot of red in the markets today. TradFi is getting crushed. The NASDAQ down almost 1.5%. Tech is bleeding heavily. We see the price of oil rebounding. We discussed the other day, and we'll touch on that in a little bit. We're also seeing treasuries had a nicer start to the day. They're pulling back a little bit now. The longer duration ones are pumping up. The 30 and the 10-year are going pretty high there. What is catching your attention today? After a day of taking in what Jerome Powell said, what the Fed thinks, how are you approaching the markets right now?
Yeah, it's really interesting, right? I was looking at the treasuries this morning. I was like, damn, these fuckers flew up. I haven't checked them recently, so if they're pulling back a little bit, it makes sense. But yeah, everything across the board, in the bond market seemed like it was going up, especially the shorter terms earlier on. But I've been keeping an eye on that. I've been really looking at the VIX. The VIX is something I think that's where I'm putting my money. Just a little bit right now for the time being. I put in an order this morning, didn't get filled because the VIX actually went up by the time that the market opened. I think volatility is going to start picking up, and we're starting to see some of that. So the VIX is a play right now where I'm just trying to buy some shares of that. And I guess crypto is the other thing that's keeping me. Actually, I would say the dollar and crypto are probably the two things that are really important too. The dollar had a great night last night. I'm seeing a little bit of a pullback today, but I'm still so confident on it. And we're seeing how strong it's been against risk assets while everything's been dumping. It's still fairly overbought and still being pretty strong. So I'm seeing that and how that's playing against crypto and also the TradFi. I don't know, man. It's just setting up for it's pretty clear case to me. But again, we have to be, can't get ahead of ourselves because this market can turn on I don't have an analogy, but it can turn pretty fast. Let's put it that way.
Turn on a dime, I think, is what you're looking for there. Yeah,
What's
we're seeing oil rebound a bit. We had discussed that, the downside risk, the downside risk there was fairly low, like not a whole lot. And then we get more news from Russia today that they are going to be cutting back on what they're exporting, sends the price of Brent and WTI back up a bit. Brent around 93.30 a barrel. I still think we're gonna, we're just on a little bit of a lull here. Nothing goes straight up before we eclipse that $100 mark. For me, I'm just really trying to stay patient here, man. The crypto market we saw a move down in Bitcoin, in ETH, and total market cap. It's not obviously enough just in one day to get me to change my mind and flip bullish and want to start deploying capital at a higher clip. We're also seeing some data today around jobless claims. 201,000 jobless claims this week, lowest since January. Once again, the Fed and their fight against inflation and trying to cool the labor market, it ain't working. There's so many jobs out there. So few people are looking for jobs at this point for what they really need. And that is, I think the markets are finally seeing that, oh shit, maybe pricing in no more rate hikes and pricing in multiple cuts next year was a mistake. And now they're having to quickly fix that. We see still, I'm looking at the probabilities, it's still showing 74% chance of no hike in November. That could very easily, that can and will change with data coming out next week and all through October. It stayed the same for December, but we see that the housing market that's where I'm continuing to pay attention because I would like to buy an investment property in the years ahead, not anytime soon, obviously. But we're seeing some of the lowest housing market activity due to how high rates are. Also, this is fun. A few fun numbers right here. Average median sale for a house right now is $407,000. That's crazy for someone like, God forbid, you're trying to buy a starter home right now. Good fucking luck. Also, the average 30-year interest rate is 7.57%, the highest since 2000. What a fucking time to be alive. Like, I am so happy and so feels very fortunate to be locked into a rate that I got back in 2016. So my wife, like, she's like, when can we get into a bigger home? And I'm like, not anytime soon. We literally just had that talk this morning, and I was like, because we got a kiddo. We're gonna have to start looking for preschools and stuff. And I'm like, babe, you're gonna need to look for preschools in this area because we are not like, as I looked at the interest rate expectations for the years ahead, and I'm like, honey, we're not gonna be able to move until like 2026. Let's just be very real about this. Like, there's no way, if rates are still gonna be 5.1% end of year, granted, if things crash, it's gonna be different. But like, I'm trying to have to my wife really does not like our home and our neighborhood, and I get it. At the same time, I'm like, we can't force it right now. Like, it's just not smart. So we're in the same situation as a lot of people. A lot of people my age who got a kid, trying for a second. Like, people are just kind of stuck in this shit situation of not being able to move out of a starter home, and a ton of people also not being able to get a starter home for the first time. So it's just like, it's a jacked up situation, dude.
Oh, I completely understand, dude. Again, you and me are a little bit different in age, so obviously there is some overlap when it comes to seeing how a lot of people that are millennials versus Gen Z are facing this. I think a lot of Gen Z, I think there is a lot of Gen Z that for some reason has a lot of stupid money, and I think that's pretty much just the internet has made them famous for nothing. They've found money in that way, but there is a lot of Gen Z that just absolutely has no money whatsoever, and they aren't great with money, like we were talking about yesterday. Most of them are spending their money on experiences. I think this is a wonderful time just to be, if you're savvy in the market and you know what you're doing, you're stacking cash and you have no liabilities, and especially if we think that rates are gonna go to zero if the Fed fucks something up, which I think we kind of know that they've already have. It's a question of whether they're gonna fix it, and if they do fix it, it's gonna be too late. You're gonna be able to get a pretty decent house. I mean, that's a great asset to have, especially if rates are super low and you lock in a mortgage at fuck if they effectively lower it to 0%. I mean, buddy, you're set. You know what I mean? You're paying off the principal pretty much. But
Yeah.
again, that's gonna also affect. But I mean, you have to have cash on hand because I don't think the banks are gonna be loaning out money that easily, especially if you're a young kid with no credit. So you have to think about stuff like that. But yeah, the housing market, it's fucked, but it's not as fucked as it will be. And take that as it comes because there's definitely going to be some wonderful opportunities for properties, especially regionally. I think some areas are going to be, some
For
areas are
sure.
going to get hurt more than others.
I've talked about like the goal here of trying to get like an investment property somewhere like up in the mountains, right? And I have, I get emails every day with different listings, and it's starting to happen of seeing like price drops, and the same house is having to do like multiple price drops. And I'm just like, I'm not gonna pay that much for that house, but I'll pay, 60% of that price in a year or two, when there are no buyers because no one can afford that place with the interest rate. So it's I'm starting to see, especially here in Colorado, some of the cracks forming. People have these investment properties up in the mountains. It's not ski season yet. At the same time, like, people will always travel to Colorado to go skiing and snowboarding, but are we going to see the same volume? Like, that to me is going to be a really interesting thing. Like, trying to look at the volume of people traveling in to go to the mountains, who need Airbnbs, right? And with how high fees are with Airbnb, and like trying to track like Airbnb's performance, because all these fees with Airbnbs, man, it doesn't make it any cheaper to stay there than it does a hotel. And so if we continue to see this push down, so many properties in high value areas are rental properties right now. And at some point, if they're not able to fill those up, they're just gonna sell them and get the fuck out. Especially if they're owned by like some big companies who have a lot of units. Like, they're gonna want to, some of them are just going to need to eat the loss, write it off, and just move on. And that's going to open up an opportunity for anyone who has cash on hand and who is patient and who wants to step in those areas. So that is what I'm really focusing right now, is like trying to have a better grasp of real estate and how to make, a play into that market when the time is right.
Yeah, absolutely. I was doing this because Death Spiral, because again, all it takes is one property to go, to lower its price, and then the other ones have to compete because that just brings down the value of all the other properties in the area. I mean, if say one person forecloses or goes bankruptcy, that house, that's just going to bring down the properties in all that area. So that's something you also have to keep in mind. It might not be a bad area, but someone might just make a fucking mistake and just screw everybody over. So keep an eye on that. I think that's, ain't the time right now to buy a house, but it definitely is the time to accumulate cash if you do buy a house. That way you don't have to worry about any of that debt, acquiring that over so many years, especially if you don't have to borrow from a bank.
Yeah. Yep. Agreed. Okay. What else is there for us to discuss? We're expecting out in Japan that they are going to finally move away from their negative interest rates. How is that going to impact the US? Remains to be seen. We can look into some of the charts as well. I know that, like I said, crypto took a hit. It's trying to recover a little bit today. I'm just ready for it to just watch it bleed, man.
Yeah, man. So the Bank of Japan, obviously, they haven't done anything effectively yet, but there is talk that they are going to be ending the negative interest rates, which pretty much made it super easy for you to have money in Japan, pretty much to borrow anything like that. They needed to do this. The yen is decoupled from the dollar so bad; it's an insane amount, and this is effectively what's made the U.S. dollar so strong. Again, do I want the U.S. dollar to continue to remain strong? For the time being in this bear market, absolutely. But this is something that the Bank of Japan definitely needs to do. And if they do decide to start raising interest rates, they would obviously start cutting off some of that debt that they have in the U.S. China, we've seen, has already done this. I would anticipate that it would be a lot more than where it's been for the past few months. I think that's effectively going to hurt the United States, and it's going to drive the operating expenses, and how the United States keeps the lights on until tax season. It's going to bring it down, and it's going to be causing probably a lot of these treasuries and bonds to maybe increasing the yield because they need to incentivize people to continue to buy these T bills and these bonds. So it's going to be really interesting. We talked about the yen carry trade. Obviously, if they start offloading USD, that's going to bring the dollar down, and it's going to shoot up theirs, and it's going to definitely impact imports and exports as well. So we'll keep an eye on this. Bank of Japan definitely needed to get on top of this, though. So I'm glad to hear that there is rumblings of them starting to take control of the dollar, because even though it hasn't gotten horrible in Japan, they have an aging population. You don't want an aging population where pretty much most of their value and their life savings and net worth just starts to deplete because they didn't do enough, and now all these people are old and can't really work as much as they used to. And then obviously that's going to be bleeding out into the younger generations as well. So something that needs to be done. It's good to see it. But that's pretty much all I had on Japan. We should probably just take a look at some of the charts because there's a lot to
Real quick,
a lot to.
I do want to bring up the renewed focus on a potential shutdown beginning
Yeah.
October 1st and how that is going to impact the Fed. Because if we do shut down on October 1st, there will not be data collection for upcoming reports around inflation and the job market. So that is one thing that is also going to add a whole other wrinkle to this. And if this shutdown lasts for weeks, because we have some people in politics who just they just want to watch everything burn. What the fuck is the Fed going to do if they don't have I don't know, maybe I'm wrong, but I don't think there are other like contingencies for like data retrieval that they'll be able to have. Like, are they going to be purely acting off of September data? And if so, is that why it's priced in that they're not going to raise again until December? Because if they don't have anything new leading up to the November 1st meeting, are they just going to have to kick the can on down the road? And what is that going to do? Like, we don't need to answer all those questions now, but I do think it's important to consider as we move into the next meeting cycle and this next round of what should be economic data. We'll still get PCE next week. We'll still get the final number on Q2 GDP next week. But after that, we would be expecting to get like a jobs report and CPI and all these things. They might not be there. The Fed might have to act on the current situation and the current data, and that would suggest they would skip again based off of the Fed funds probabilities, which has been very accurate. Like it's been accurate. Like it's nailed it. So that is something that could really put a big old turd in the punch bowl of trying to get this get this soft landing. You weren't expecting turd in a punch bowl.
I love
Of
it
making
though.
this soft landing. If this soft landing was already a low probability, this is going to make it even harder. Like, good
Oh, yeah.
luck.
Let's be honest. It's a matter of time until something breaks, right? The Fed, if they don't have that data to, they're navigating the what is it? They're navigating using the stars on a cloudy sky or some shit they said back at Jackson Hole. That's what Powell said. He's got worse fucking sayings than I do. But anyways, he
I
said that
love
yesterday.
Powell. Can I just say for a second? I
You're,
fucking
you're
love
a simp
Jerome
for
Powell.
Powell.
I'm not a simp for Powell. I don't think he's done everything perfectly. Like, don't get me wrong. At the same time, like, just seeing the way that he reacts to people, like in the pressers and when he goes to like Congress and the Senate, like, I feel for the guy because he's trying to do his fucking job. He's a smart dude. And he's just surrounded by morons, whether it's reporters or politicians who are just, they're all trying to make his job harder. And you can just see it on his face. Like his patience is wearing very thin. And he has very few fucks left to give. And I can appreciate and respect him from that standpoint.
For sure. I don't necessarily hate. I don't really hate anyone. It's the fucking game, right? These people are in their positions. I can't get upset for them. Fucking, this is the same game that we've seen since the 80s, 90s, fucking 70s, whenever inflation rises. But my thing with Jerome Powell is that obviously he didn't act fast enough. And I also understand that he's got to worry about Congress and all these other fucking people that are not necessarily helping, especially when we're sending tons of fucking money to everywhere in the fucking world. We're spending money an insane amount. We're not buying fucking oil when it was cheap. Instead, we're waiting for it to come down when the prices are going up higher, which effectively, impacts inflation. I get it. He's got a hard job, but for me, it just, I don't know, man. There's nothing this guy can really do right now at this point. I think the Fed's lost. I think it's over. It's a matter of time whether they raise 25 base points and they break something right away, or they just let it slow bleed, and then next thing you know, it's like we're insolvent now. So going back to the shutdown, it's like, okay, we say there is a shutdown, right? What happens if a bank gets fucked? You know what I mean? What happens if something like that happens? You know what I mean?
Great question.
Do they come back together? Uh,
Cancel.
do they come? Hey man, I was talking about 800 basis points before anyone else was. But yeah, it's like, what do you do if a bank fails and then now we start seeing contagion in other places of the banking sector, or consumers are just absolutely getting killed because oil is trading at $105 a barrel by October 15th. You know what I mean? I'm not saying October 15th for a specific reason. I'm just saying it's probably going to continue. And does the Fed have to operate on stock prices in that way, where they're looking at commodities and say, okay, we don't necessarily have the data. Should we be proactive because this looks like it's getting out of fucking hand, and we don't have that information? Maybe. I probably not though, because they're a little bit more rational and slow to act when it comes to the issue of inflation. Sure, they've brought it down from 10% to whatever the fuck it is right now. It's going up. It's like 3.8 or something like that, or higher than that. I really don't remember the number of inflation where it is, but we could see that battle is way easier than with the last 20 yards. We're in the red zone where it's like we can't get it down to 2%. Do they settle for 3%? Them shutting down is just going to effectively impact everything going into the end of the year. It's going to screw up a lot of things. It probably will accelerate the recession and might even be a perfect excuse for the markets to absolutely just drop for obviously if something bad were to happen along the lines of banking. So if there is a government shutdown, I expect chaos just because there's no adult in the room, But I do think that it's definitely going to be the Fed's going to have an even harder time if the government does shut down, because they probably won't act properly on the right set of data, and they probably will just say, hands off. And this might even make things even worse going into Q1 of next year too.
All right, let's look at some of the charts. I want to pull up the VIX.
Oh
Take
yeah,
a look back, because it's finally on the move up. God
still
bless.
still pissed I didn't get in earlier, dude. I was trading the UVIX, bought some shares. I was thinking it was gonna get under $3, shot up to like 328. I was like, fucker. But whatever. The VIX is still, I think, undervalued. We got it here today. We can see that we're up about 8.39%. Was a little bit higher today. Shot all the way up to, what's that? The height of 16.68. And if we're looking just from a few days ago, I mean, we bounced straight off the 12 0.64, and that was the lowest we've seen in some time, probably since March of 2020. Yeah, or right before March of 2020. So we saw that's the lowest it's been. Honestly, this is a pretty good level of support. Does it have to go below it? It could go below it. I'm not discounting that at all. I think that the VIX is definitely gearing up for something. We're starting to see some of the volatility pick up. You can see that the weekly, the stochastic RSI is moving fairly quickly for how little this has actually moved in comparison to how much it's moved in the past. It's not necessarily a great sign. So maybe there is a little bit of room to the downside here. Maybe we don't even close up, this high this week. It'll be interesting. And then if we look at the monthly, we can see that we're completely oversold here on the monthly. There's plenty of room, and we found some really good support here. So honestly, that bet that one guy from who I think is JP Morgan made for saying that the VIX is going to go to 180, I think that there's going to start being a lot more pressure on people buying these ETFs, these options, betting that the VIX does increase here. If not for the belief that the market is going to crash, maybe just as a hedge against, say the market does drop and they're bullish. Maybe it's not a bad idea having, contract expecting the VIX to go up, maybe offset some of those losses. I think that's a smart move. I don't think that's a bad move by a lot of people, I think, in traditional finance. I personally think that the VIX is going to take off, and I just kind of want to be holding shares of UVIX, which is a leverage 2x VIX ETF. I would like to see that, say if it goes to, I don't know, say if it goes to 40, 50, obviously if I'm getting in when the VIX is down at 16, that's going to be a pretty good return on the UVIX. So keep an eye on the VIX. I think it's going to break out fairly soon, especially if we see the volatility pick up. And I think the volatility is going to pick up once we hit a certain level. We actually broke a pretty important level today on the S&P. Did you want to go back to the VIX at all, or can we move to the S&P?
No, I'm just pulling up on my end the chart for the UVIX and taking a look at that.
Absolutely. It's absolute shit, the UVIX, how it looks, but I think it's so oversold to the point where if we do see like a spike to 80, 60, 80 or something like that in the regular VIX, fucking multiple of that, 2x times whatever it moves up. It's a pretty good, I think that's a pretty good return. So that's just, that's my hedge.
I'm not even
It's not
seeing a SRSI for the monthly.
On the UVIX.
Yeah, I'm seeing it's overbought on the daily, and then on the weekly, it's like right around the middle. So I guess this came out like March of 22.
Yeah.
So it hasn't been around for too long.
No, and again, it's a 2x.
Also, it's never seen a huge spike up in volatility either.
No, it's never experienced a true VIX, effect. So we'll see if that does anything. Again, I got like very, very little cash on the side. I'm just seeing if I can make some money. And again, if the VIX does decide to go to fucking 180, hey, I'm holding VIX. I have VIX exposure. So
that's just, I'm looking just real quick. The week of Silicon Valley, that week alone, the UVIX went up 45%. So if we think we're gonna, and you're getting it right now at 331 a share. If we're thinking that we could see volatility get back to that level, it's not a bad return. Like,
no, not at all. Why is it enticing you?
It is.
It's good. I'm glad, but
maybe I'll
not
throw
financial advice, but
not financial advice. Like if I'm gonna do this, don't copy trade me, please.
Yeah.
But I'm an idiot. But yeah, it looks. I don't know. I'm not gonna say it's low. It's no risk because there's always risk in the markets.
Oh, absolutely.
But the downside where it is now compared to where it could be if we do see high volatility. Because God, if you look back at where it fucking was.
Let me pull it up real quick.
I'm getting a little hot and bothered over here by where it was back in in 2022 when things got shitty, and just how, oh God, I might have to go do this.
You really, again, the reason I got into this one is because the share price was so low and it was 2x. Obviously, I guess I'm saying I'm a gambler, but pretty much when I'm looking at it, I'm just like, it seems undervalued. And again, the thing for me is that the technicals aren't as important as the anticipation of what I think is coming. And that's the thing when it comes to the VIX. Obviously, technicals do matter to an extent, but I'm anticipating that the VIX is going to go up. Therefore, this 2x long is going to go and react to it. And I think that if the VIX does shoot up and people are like, oh, fuck, let me get into the VIX. I mean, this is not a bad way to get some exposure if you miss the first leg up with the VIX, right? It's 2x, so you can still make a decent amount if it goes up. Say it's at $10 at one point and it shoots up to like 30. Again, do I think it's going to go up that high? I really don't know. This is me just saying, fuck it, let's get in on the VIX. I need some exposure. I can't trade the damn thing by itself because I'm not on the CBOE or New York Stock Exchange. I don't even know what fucking VIX is traded on. I think it's one of those. But yeah, I think it's extremely low right now. I can see that it's kind of flattening out. You see that the weekly is, oversold. But the thing that's really important here is look at the volumes. Look at how the volumes are picking up and the price is going down. That is, for me, bullish divergence. That means that there is probably going to be some type of spike if we're looking at this. And again, this is the UVIX, it's not the VIX necessarily. So if this does indicate that there is going to be some spike, fucking, having some cash on hand or then I'm dumping into this, I feel fine even if it goes to fucking $1. But I don't think it's going to go to $1. I think we're closer to volatility than we are further from it.
All right, you've sold me on it. I'm gonna get a second mortgage and put all into the UVIX.
Again, the amount I have is less than $1,000 right now. I'm just letting you know because I do want to add to the position, but I'm just I still think that there could be a fake out that could bring the price down a little bit lower. But I do see that there is value having VIX exposure, whether it's that or somewhere else. Not financial advice. Just that I find the exposure to be good, but this is why we're looking at the S&P, right? This is at it's at 43.39, broke through 44 this morning. I mean, this is really important. We're going to pull up the daily, and we'll look at crypto very loosely today. I think there's lots that we can go over, but this VIX, I mean, this is a huge gap. We from 44.01 down to 43.72, so roughly, a 28-point gap or something like that we've seen between the open and the close, or the close and the open. Interesting. 43.50 is a pretty good level, I thought, of support, which would be roughly right around here. We're below it. The key level for me, I think, for the S&P, because I know that there is a lot of machines out there, and if you don't know what I'm talking about with machines, that means that a lot of these institutions use trading bots and stuff like that. So if the price gets below a certain level, they'll either buy or sell, kind of like a stop limit or a limit order. But I think that's if we get below 42.5, that'd be really interesting, which should be, let's see, effectively somewhere below the 200 EMA on the daily, say right here. I think that's when you're just going to start seeing a lot of panic selling in the market. I think that we are going to start seeing a lot of selling considerably that we're under 43.5. Maybe some of them start to offload, but if we're not able to regain that, and we start heading down towards here, we could see potentially a lot more selling in some of these major institutions. And I mean, just to be clear, we're not too far from putting in a lower low in this local market, right? We obviously put in a lower high here. We said that the top of the market was back here in July. We called it, and I honestly still believe that that is the top of the market. But you can see that if this goes lower than here, then probably going to try and find support. Next level of support is probably going to be that 200 EMA at 42.63. That doesn't hold. We're probably going to cross in the 42.5. What that means is probably there's going to be a lot more selling pressure down here. So a lot of the people that are saying that all the sellers have sold already, they have no idea how much you can actually sell, especially if you don't own the asset itself. So we'll keep an eye on that. But I think this is another reason why the VIX is going to be extremely volatile, because once it hits that one level, I think it's going to be a floodgate. And again, the VIX watches the S&P. So we'll keep an eye on that. We know that, oh my gosh, Dow is eating dick today. I mean, I don't mean to say it, put it that way, but it really is. It's at 3:15.
No, tell us how you really feel.
At least you're getting honesty out of me, man. This is fucked. Look at that. 315. There's a gap here. It broke below 34,347, which you knew was a huge level of support. Man, I was talking about this for the monthly close of September. It fucking shot up above it. The week before the close, it fucking closed below it, and I was like, ooh, fuck. But yeah, we saw a lot of bullshit in between. But yeah, we're below it right now. It's a huge move. We're gonna see if we're gonna test the 200 EMA on the daily. We're out of the parallel channel. If we can remain out of the parallel channel, that's this one is in. You got a long way to the bottom. In my opinion, or you would anticipate at least a test of the origin, which is here March of 23, which is 31,438. effectively 3,000 points away. So we'll keep an eye on that. Not necessarily a good look on it's still dropping. It's down 333 points today. Fuck. NASDAQ's down a lot too. I didn't even notice this.
Yeah, NASDAQ's down,
It's picking up right now.
But and the VIX is climbing still. It's almost a 17. It's getting there.
Man, I should have thrown more into that UVIX.
Rapidly 17.
Let's hope that the VIX calms down so we can get back into the UVIX trade, because I'm probably gonna dump a little bit more into there. And the reason I got into that is because all the options on all these other stocks, like I was telling you, are fucking not as cheap as they were 2 weeks ago. So that gives me another indication that we're going to see some volatility, because now they're starting to see people who are betting similarly to how I was, that we're going to see a market downturn in the next 6 to 8 months. And if that's the case, then maybe it wouldn't be bad to have some low risk, high reward options out there that could potentially make you a lot of money. So, I mean, this is a fucking huge gap that we built. There are 3 huge gaps in the major indices today. The dollar pulling back a little bit. But honestly, I think the dollar, it did cross our level too. Let's pull up the dollar real quick. You can see that as soon as it went up to that white level, it went above it and it got rejected. I don't think that it's over. I think that we are going to reclaim it. But again, that's such a huge level of resistance that it's not going to be easy to cross it on the first try. Let's see if we get it in the next time we go above it. But again, this is the major indices are printing something very bad in how the numbers are looking. I mean, look at this. We're going to go to 33. Are we going to close at 33 by the end of the week for 33.9 for the Dow? It's at 34 right now. It's fucking insane how much it's selling off right away. Let's pull up Netflix real quick. We're gonna get to crypto, I promise. But look at that.
We gotta move quickly because we're already 31 minutes into this, and I do have to get going soon.
My bad. All right, look at the Netflix. It filled the gap. That's all you need to know there. Shit's going crazy right now.
Let's look at Bitcoin and look at that death cross and how close we are to hitting it.
Yeah. So death cross, you can see that it's kind of hard to see actually with this. Let me pull this up. Let's make the red one. Let's make it green for today. You can see that the death cross is coming in here. It's probably going to cross in the next few days. This huge candle to the downside today, if we close with this, obviously below the 200 EMA, it's going to make a huge difference and it's going to affect price. But that death cross on the 200, the 50 and the 200 EMA is going to happen if we continue to close below it. So I think this was a bit of a fake out. Now we're heading down, probably going to see this death cross in the next week or so. Again, still not counting out any crazy shit, but we know where our targets are. We know that 25,284 is going to be a huge level of support that we have to see if we can hold. If not, we're going to go down to the 22 to 23 level, and I think 23,629 is going to be an important level for us to watch as a target before we get another bounce, to the macro, maybe above 25K, maybe not. But yeah, we wait for that wave 2 once we finish this wave 1 down here. You can see that alts are bleeding like crazy right now. It's red across the board. Bitcoin dominance is at 50.15, so it's come down a little bit. See that USDT dominance is rising a little bit here. Markets are effectively in a place of a little bit of fear today, and we're just gonna see how it plays out going into tomorrow. Tomorrow's the weekly close. It's gonna be more important than how it closes today, but that's really all you need to know for the crypto market. Keep an eye on how the daily closes today, and keep watching that 15,200 EMA on the daily chart for Bitcoin. So that's it.
All right, good deal. We'll be back tomorrow, same time, same place, closing out the week. Gonna be an interesting one. We'll see if this bleeding in TradFi continues. I don't see what's going to stop it at the time being, especially with all of this renewed concern about a government shutdown or energy uncertainty over in Europe, all of these things. So hope everyone has a great day. Thank you for watching. Before you go, hit that like button, subscribe to the channel if you haven't yet, if you enjoyed our content and want to watch more of it. Drop us a comment, share us out on social media. All of those things mean a shit ton to Kevin and I. So thank you so much for being here. Have an awesome rest of your day, and we will see you next time.
Take care, everyone.